reggae, play the blues, the blues, the blues. Make you do as I do, I do, I do. Enjoy yourself, baby boo, baby boo, baby boo. Even your boo get a boo, a boo, a boo. Share the gala, share the booze, the booze, the booze. Everybody wanna groove, the groove, the groove. As far as the money they pay, EBO pop champagne. Baba see bad the way them the boo, the boo, the boo. You don't know I'm a catchy the bull, the boo. See money for go like swimming pool, the boo. Yeah, you dey give me wings like wedding pool, the boo. Baby, anything you want to make I do, I do, I do. I never tiger back to my boo, my boo, my boo. Oh yeah, now our master oh, you the god oh. If your body cut your mortgage, you go get belly.
So good morning and welcome to Supreme Academy. My name is Joan and I'm your host for this presentation. Okay, so this is a video to show you how to enter a trade on nasdaq and how to exit a trade. Okay, but before we get moving, I would like you guys to study the course that I've shared, a price action course. It is a course by another mentor teaching the basics of price actions and what you should know about price action. It is a forex course, but what you're gonna learn there, we are going to apply that on nasdaq 100. So I'm not going to waste time teaching you nasdaq 100, teaching you price action. So I have shared a course where you should go study that course, and then after you've studied the course, you can study you can practice my strategy, how I trade nasdaq 100. So it is important for you to know that nasdaq is not difficult to trade as compared to currencies, and nasdaq is so simple. Okay, but you can lose a lot of money trading nasdaq because it's highly volatile, and as well you can make a lot of money from nasdaq. You can make a lot of money from nasdaq as well because it moves a lot. I mean, so here is the thing, we are all interested in making money. Okay, so the reason why I trade indices is they don't waste your time. This is just an account for presentation. So when you're trading forex, you must have realized that sometimes you have to wait for the orders to for the market to start moving, because the market makers has not enough liquidity, and they have to grab a lot of liquidity for them to initiate the move. Okay, so when you're trading nasdaq, there are things that you should put into perspective. The first thing that you should put into perspective, or rather before we get to there, it is important to note that what you can make in forex in a week, you can make that one in trading nasdaq in a day. Okay, but it's not as easy as I put it. Okay, it is the more you practice, the more it gets to the system. Okay, the more you play around with it, the more you get, the more you get more info how nasdaq behaves and stuff. I'm a friend of volatility. I like volatile stuff. I only trade nasdaq, pound, and volatility 75. So I only like nasdaq because it moves a lot. I mean, I don't have to wait. I can close my day with just 1 hour worth of trading. So in forex, you must be very patient for you to succeed in forex. But in indices, you can press a trade and in the next 1 hour you've closed your day. But practice is all that matters. Okay, so when you're trading nasdaq, you don't have to put a lot of things, you don't have to complicate things. I mean, you just have to keep things stupid simple. So you guys go study the price action course I've shared, because I might not be able to show you, to teach you price action, because there's a lot to learn about price action. But I've shared a course for you people to go and study price action before you come to apply it on trade. It will help you to understand so many other things that happens in the market, and I might not have that time to show you that, and because some other mentors have already done so, you go study that course and then you can check out my strategies. Okay, so this is nasdaq chart, as you can see here. This is nasdaq chart. So when you're trading nasdaq, you must put some few things into perspective. The first thing that you should never ignore when you're trading nasdaq is support and resistance. And we have two types of support and resistance. We have dynamic support and resistance, and we have the horizontal support and resistance. I'm telling you again that you will always put support and resistance into perspective, both dynamic support and resistance and the horizontal support. Okay, reason why you should put that support and resistance into perspective is because nasdaq respects support and resistance. When you compare, if you go to forex trading and you try to trade support and resistance, you're gonna get screwed in forex. There's a lot of manipulation when you're trading currencies. The first thing is that the market makers, they know that you people are waiting for a support for you to enter a buy. You people are waiting for a resistance for you to enter a sell. And it is at exactly those places where they place their traps. Okay, but when it comes to nasdaq, you can simply trade support and resistance and demand and supply in combination with some few price action concepts, and that is what I want to show you here. Okay, so that is one thing. You will never ignore support and resistance. You can never ignore support and resistance when you're trading nasdaq. So first of all, this strategy is a scalping strategy. I like scalping. What you do, you enter with a big lot size and take your profit at 2 candles 15 minutes or 1 candle 15 minutes, depending on the setup. Okay, so I want to make this video as short as possible, and I just want you guys to concentrate on scalping. If you want to trade nasdaq, and you don't have a strategy to trade, to hold, to enter trades that can be held for a long period of time, I prefer scalping. You enter a trade with big lot sizes, and in just 2 candles or 1 candle, you've taken your profit and you've closed your day. Okay, so the second thing that you should put in to your trading is the Fibo retracement levels. And for your information, you just trade the trend and the ranges. That is the only thing we trade. Okay, so the first thing, when you enter into a nasdaq trading chart, the first thing, so as you can see here, I have session breaks. Okay, this tells you that this is one day, this is another day, this is another day, and this is another day, and this is also another day. Okay, session break. So to find the session breaks, you just like to click, you go to properties and you click show period separate. Yes. Okay, so every day this is the start of the new day. So what I do, I mark that area. So the first candle, the opening candle of the next day, I always mark that area with a line like that. Okay, and that is the opening, that is the close, the opening candle, and the opening was here. So I put 2 lines like that, and let me see if I can find the box. Should be somewhere here. Customize, where is it? Can't find it. Jungle. Okay, so and then I shade that zone there. I shade that zone like that. Okay, so our market opened at that area there, and the candle that was responsible for opening the market closed there. So I shade that zone, and remember, this is the beginning of this day and this is a close of this day. Okay, so when you look at the market here at the opening, let me remove the delay so that I can be able to draw. So you look at the market like that, it did something like that. Okay, so if we extract this information, like that, that is exactly what the market did after opening at that area there. It created this pattern. Okay, this pattern, let me draw a line there. So the market did exactly this. It opened here, went up, the candle closed there, and then there was a retracement to the area where the momentum, where the price, or where the market opened. Okay, so and it created this N pattern. This is N pattern. Okay, so what you do as a trader, this pattern, it does not form all the time, but it forms, and when it forms, you trade this pattern. Okay, so your area of entry will always be here. After that area is breached, okay, the market created an N pattern and breached this area here. Okay, so this is the place where you play the trade, and your stop loss below this area here. Okay, so your buy would have been somewhere here, because the market, let me draw again, it opened there, it came all the way to that place and then dropped like to the initial place where the market opened, and then it shot up like that. Okay, so remember, I've told you this is a scalping strategy. You don't hold, and in Nasdaq actually you don't need a lot of move for you to make money. You just need a very small movement. Yeah? Don't over leverage your account. Make sure you grow that account exponentially by following a strict set of rules, okay, and following a strategy. So this is one pattern that I trade when I'm trading Nasdaq, and it is very effective. The reason, what gives me an edge in trading such kind of pattern is because I don't hold too much, because one of the characteristics of volatility is that it will go up very quick, it will come down very quick. So if you're not careful and if you're not chasing these big moves, you have to be very you have to concentrate actually, and you have to take profit, because if you're scalping, you have to use a big lot size for you to make a considerable amount of money, and you just do that. So this is one pattern here, that this information, but I only enter when this high here is breached. That is what the market did exactly after the open. Most of the time I do my timing here when the market closes and opens. So and I told you, like, if you can draw carefully here, one of the most important things in trading Nasdaq is support and resistance. If you can look here, there is a support here, okay, there is a support here, okay. If you look here, the market was unable to come up, to drop past beyond this area here, but initially broke that area there. So what happened here, after this information, the market retraced back to retest this support line here, okay. So the market did exactly this, okay. So this is the easiest part, very easy actually. So like, if you look at what the market did, it came to retest the previous breach, okay. The previous breach was retested here, okay. So you have a very nice entry. You would have entered here, that latest here, and your stop loss below there. Your stop loss below here, okay, and your take profit would be the next 15 minutes candle, okay. But put in mind here there's another high that has been created. Always don't wait for that high to be broken. Take your profit somewhere below the previous high, okay. Take your profit somewhere below the previous high. You don't want to get scrolled. You don't want to be in profit and then all of a sudden your profit is gone, okay. Target for 2 to 3 or even 1. If you have a big lot size, target 1 or 2. That is what I do most of the time. Through the webinars that are gonna come, I'm gonna show you live scalping in action for nasdaq, okay. So if you look careful, the first thing I have done is that I've marked the opening and closing of the opening candle of the next day, and then I've shaded the region, and then the second thing, you wait for the market to give you a pattern, okay. And for this case, the market has given me an N pattern, which is commonly used in trending scenarios. But remember, I told you must put support and resistance into perspective. So looking at this chart right here, I can see that this area here, this line, is a support line, okay. And perhaps that is why after the opening the market was unable to go past beyond that line, because I can see it was respected here and it was respected here. Also it was respected here because it didn't go too much. It forms this rejection and then came down like that. So this is the true support and resistance. Actually this thing here, let me find the what, okay, let me just use this. So this thing here just confirms that you have a very strong support and resistance here, okay. So this line here, so immediately after the market opened here, it came all the way up, was unable to go past beyond that, and you have a stop hunt here, okay. Remember, most stop hunts happens around these support and resistance areas, okay. So you have a crazy confirmation here that this is a true support and resistance. So the market gave you an information. Your entry was right after the breach of the previous high there, okay. So the second entry is the retest of the previous breach, okay. So after so your entry, so you see sometimes you'll have a very minimum drawdown, sometimes even zero drawdown, but you don't have to worry about drawdown. Define your risk. Here your stop loss would have been down there, and this would be your entry. So on this trade you had close to zero drawdown. So here you also had a very small drawdown, okay. So after entering on the retest here, you take your profit slightly below the previous high here. Don't wait for the market to come to this area, because most of the time the market will come to that area also slightly lower than that area, and drop back, okay, failing to take away the previous high. Yeah, so that is perhaps most that is why you should always take your profit below this. Make sure you take like 2 to 3 candles. Like if you entered here, your take profit would have been exactly there, okay. And you see what happened. The market did not break that area. Actually, before even reached that area, the market dropped again before now taking off. So your second re-entry would be, let me address, would have been here after the second breach of the previous high, okay. So after the second breach of the previous high, that is your re-entry, okay. That is where you enter some other trade. And when you're scalping, you need to enter with a big lot size. That is how you grow a small account. And I'll show you a formula where you can grow a very small account to the levels you cannot even imagine, okay. Take for instance, if you have $100, the first thing you do first of all is to double that account, okay. That is always your first goal. When you double that account, the second thing is to withdraw your initial investment, such that you have only $100 left on your account. You've already withdrawn your initial investment, meaning if you lose nothing. You'll be risking the profits from the market. That is one way of dealing with fear of losing money, because when you enter a trade knowing surely that you're risking the profits, you're not risking your initial investment. I mean, fear is, the last thing you'll ever think about, okay. So I was telling you this is your second re-entry here, okay. This is your second re-entry, and this is here now. This would have been your second re-entry, because it was breached after a retest here. After a retest, it was breached, okay. So so the other thing that I've not shown you is the FIBO. You see, right after the opening of the market, and it came back to 100% FIBO level, because if you put your FIBO here, it came back to 100%. However, if you consider the previous low was here, okay, your previous low was here. So if you take your FIBO and you drag there, right after where the market opened, went all the way up and then retraced, if you measure from here, giving you a 38.2 FIBO retracement level. The reason why I like FIBO is it is effective when you apply it correctly, okay. So what happened here is a retest here, okay. So the guy who was responsible for pushing the market up, that is your A. That is where you place your FIBO now, because this area, your second entry here, is a Fibo level. That is, anyone can see that that one is a Fibo level, actually a 61.8 Fibo level, which is, most gurus will tell you, is a golden ratio. Okay, so that was a trade you rode massive lots. So when it comes to nasdaq, if you want to grow a small account, forget about risk management. If you're trading nasdaq or any index that is volatile, highly volatile, like volatility 75, and you want to grow $100 to $1,000, make sure you forget about risk management. There is no way you can do risk management with $100 account. Okay, you'll be taking 100% risk trading with $100 account. But you know, it is what it is. I have done it many times. Your first goal is to double that account, withdraw your initial investment, and then risk it. Okay, no risk, no gain. I mean, and I have done this with volatility. There is even scenarios where I raised that US dollar to like 1,500 or something. Okay, from that US dollar, because there's no hurry in trading. I've never come across any hurry in trading. What you have to do, you have to study. You have to learn from people who've made it, who are profitable. Okay, being profitable does not mean that in every day you have to have a winning trade. No, it means that in the long run you'll able to say that I've made this. So like you cannot really say that because in 3 days you've made $3,000, you cannot say that you're profitable. But if in a month you can say that I made $3,000, then that is a good conclusion. You can say now I'm profitable. Okay, so with nasdaq you have to risk. If you want to grow a small account, you have to risk, and you only have to risk your profits. Put $100 account, make sure you double that account within 2 days or 3 days. Then make your timing and risk the $100, all of it. That is the first time you'll make $600 in 1 hour. Okay, $800 or even 1,000. It is possible with nasdaq 100. It is not possible with EURUSD. Okay, it may be, I may be wrong, maybe, you know, but it is what it is for me. Yeah. So this here is the secondary entry. So I've told you the first thing what to do here and how to use Fibo here. So the second place, you place your Fibo here. Sorry, you place your Fibo there, and it gives you a 61. It gives you a 61.8 Fibo retracement level. So you have a conference here. you have a retest to the previous breach, and you have a feeble confirmation. So you node that trade going forward. So you can see what happened, yeah. And if you look carefully, this move started here. This is a trend, okay? Is a trend, but your focus is on this area, the areas of breach and the areas of retest here, okay? So what happened after that? The market went up and then went to a consolidation phase. So what happened? What happened later, as you can see, after the market breached this area here, that area, yeah, I think I should shade the area. After the market breached that area, it actually came back to the same area, fairy test. So this is another place now you utilize your Fibo, okay? You take your Fibo there and you place it to the high, and then you read the reading here. So it is at 50, almost to 60 percent Fibo retracement, okay? And it is on a breach. It is a retest on a previous breach here, because it breached this area here. So you bought over there and you went up and then retraced to the same area, okay? So that is another place where you're looking into taking a trade, and you have the Fibo as your confirmation or point of conference, okay? So it is very simple. Again, this is another area of breach, so make sure you take your profit somewhere there or even slightly higher. Mostly for me, the consistency I get is because I don't hold too much. I take 2 candles, 3 candles profit. And I'm good. So this is where you take profit and then you wait for the breach to happen. And in this case, the breach happened right there. The breach happened right there. So you buy that trade, and the same thing happened. So this is how you trade, okay? So I'm looking if for instance the market do like this, so I've told you here, this is your the point where you place a trade and you take your profit there, okay? and then you wait to see what will happen to this area here, whether the market will breach that area or whether the market will reverse. So when the market is ready to reverse downward, when the market is ready not to breach an area, what it will do, market will create a lower low from the previous high. So you're interested in this market had a breach here. The market had a breach at that area. You bought and made profit. It retraced again to that area. So this is another area that you bought and you take profit because you're not waiting for the market to come all the way to that area. But before the market at this time did not breach that area. However, you are anticipating that the market will break that area, but it has given you some new readings. I mean, the market was unable to breach that area. Okay, so now your focus changes to downside. Okay, now the area where you will be expecting so now the area where you will be expecting to enter a trade is this area here. So your focus now changes to this area. Okay, so when this area is breached, you enter a trade, you sell, and you take your profit very fast after the two candles or three. Okay, because this is how nasdaq behaves, right? I don't know whether I have explained well there, but that is what you should be doing. Okay, so there are three things that happens with these scenarios here, these two scenarios here. This is the market structure, and this happens all the time for nasdaq. Okay, so let me see if I can find another trade. Like for instance, you see right from the beginning here until here, you never made a loss. If you follow this criteria, you never made a loss. If along the way something like this happened, you would also have not made a loss. What you would have done, you would have changed, because you've been given a signal here. Okay, so here the market, it has not taken any lower low. It has not taken any lower low. In this case, this is what we're calling, if this low is taken down, if it's broken down, that is what we're calling. So welcome back to this presentation. I had to go off. There was a problem with electricity. I'm back. So as I was telling you, you have to concentrate on the day that you're trading and pay attention to the market structure. Okay, so there are only two scenarios where you only trade: when the market is trending and when the market is ranging. Those are the only two scenarios that I personally trade. Okay, especially when I'm using this strategy. So I was showing you this part here, this day. So we go to the next day now. Okay, so I told you the first thing you do, you draw the lines or the zone where the market opened Okay, so and I can draw that zone. That was the opening of the market. However, for you to trade this day, you must read yesterday's price action. Okay, you can see that yesterday, the whole of yesterday, the market was trending up like that. So even on this day, you put that into perspective. So the previous low here has not been taken out. Okay, so this low is still very active, and unless it is taken out and retested, that is when we can be able to change our minds. Okay, however, this level here is a Fibo level, is a Fibo retracement level. Okay, so you place your Fibo here, you drag it all the way up, and it will give you a Fibo retracement zone, which is 61.8. So this is another area where you would have entered a trade, and if you look careful, the Fibo is coming on a support and resistance area. Okay, this I don't know why it's not okay, yes, so I have drawn that zone like that. Okay, this retracement on this day has come on a support and resistance. It's a Fibo area, and there is a demand zone here. Okay, so when you place your Fibo here up there, it gives you the golden ratio 61.8. so this is a trade right here. Okay, this is a trade right here. Your second trade would have been that place. Okay, that would be your second place for you to enter a trade. The reason why is because now the market has reached the previous high up. Okay, remember I told you only scalp. If you scalp, you're gonna have a lot of wins as compared to losses, because when you hold too much, the market is gonna reverse on you, and it's not going to be good. Okay, so you have to trade here. You have one trade here where you only take your profit somewhere there before it hits the opening of the day zone here. So you don't have to, because most of the time I'll come to that, because you can see here the opening of the day most of the time it happens on a demand zone or supply or support and resistance. Okay, so you only take your profit there if you enter a trade there. Okay, so the second trade after the breach here, you enter a trade and you take your profit somewhere there. I mean, it is a scalping. The what you do, you take a trade with big lot sizes. Okay, because you like have the confidence that this market is a must or give you 2 candles of profit. Don't worry about a small drawdown, because that is inevitable. You cannot trade and expect no drawdown. You'll have drawdown sometimes, but don't be bothered by drawdown. It's a normal thing in trading. So in this day I've drawn this zone here, the opening of the day, the candle that started the day, the candle that closed before now the initial move. So later on I'll show you how I trade the break of this candle, the opening of the closing, the opening of the next day candle, but that is extreme scalping by works profit. Okay, so we're still on the market structure. So in this day you have this trade and you have the next trade here. Okay, but I want to show you something here. If you look careful, let me remove all this. So if you look here, the market came down that it was unable to go past beyond this area. It was unable to go past beyond that level there. So the market retraced back like that. Okay, and then came back to this area again. He was unable to break that area, creating a support area here and an area of interest, but initially it blocked that area to come and test this support and resistance, which is a feeble area. However, you see this high here, this high was unable to take this high here. Okay, so and because it was unable to take that high, that is now this one is the interesting area here. The high here was unable to take up this high here. So when you see something like this, you wait for the market to create another lower low here. Okay, now this would be an area where you sell the second low. So let me show you here in a clear. So if you see that the market was on an uptrend, the market was on an uptrend, was the market structure, the market was on an uptrend like that. All of a sudden it changes. So like it was on an uptrend, but all of a sudden it changes, and this high here, the market it's unable to take out that high. It comes back down to test this level there. Can you see? Excuse me. And does something like that. Now this is your entry. Okay, if you see something like that, this is your entry. This is area 12. Okay, but you don't have to know a lot about area 12. Just you just have to master that pattern. Okay, if you see this something like that, this is your entry. This is where you sell there. Okay, you sell there and you enter a second sell after the breach of the support, because it will happen. That is like 99% most of the time it will happen. And just scalp. What I'm showing you here, don't do this in forex. There's a lot of manipulation in forex. When you're trading index, this is very very common, and it is what you see here. This pattern here, it is exactly what you see here. The market was on an uptrend, as you can see. All of a sudden the market came down crashing. This high here was unable to take out this high here. It came and was tested here, and then the second high was unable to take this. Now this is your entry. You sell this, and because you are scalping, we are not doing what, we are not like holding the trade so much. we're just scalping. We're looking for 3 candlesticks, 2 candlesticks, or 1. It depends on your time. Like going 2 candlesticks worth of profit. Sometimes I even take one if I'll go with a big lot size. Okay, so this pattern is same pattern here, and it happens a lot of the time, most of the time it happens. So, and it is very common. So first things first, you will never ignore demand and supply. If you ignore demand and supply in trading indices, I am telling you, you won't go anywhere, because there seems to be like very little manipulation with nasdaq, unlike forex. Okay, and if you ignore simple you ignore like demand and supply, which is very simple barriers that you put into your mind as potential areas where the market may reverse, you're going to get screwed. Again, only focus on the market structure. Take for instance this day here. We mark the opening of the day here, and that candle, that candle is the opening of the day. So you draw that zone there, you mark that zone. That is the opening of the day. What the market did, the market, let me draw, it did exactly this. Okay, this is an N formation. So if I draw it here, if I draw it there, so as you can see, the information, this is like N information, inverted N formation. So it is, let me change this to so that you can see, put like yellow color, then here I can put again like that. Okay, so it is exactly what happened here. Okay, the information, this pattern here is the same with this pattern. However, I told you the only place you trade is right here after the breach of oh, so excuse me, I have to pick up this call. Hello. So you have to, this is your entry, right? This area here we have drawn that line is your entry right after the breach of the end. If I draw it here, you can see clearly that is your entry. Okay, don't worry too much about, you know, fake out. I mean, most of the time you won't have much of fake out. Okay, this is your entry there, and you take profit. I said just have so you see on your right side, I told you that you have to read the price action of the previous day. So because you can see here that you extend that is a support, or the demand is a support is a support zone there. So if your entry is there and you hold your trade too much, you'll get screwed, as you can see. Okay, because this thing respects this demand and supply zones. I mean, it's crazy. Okay, so just take, and I'm telling you, as you will see on the examples and on the webinars, you will see that This is a lot of money, this movement, for people who scalp. So if your style is not scalping, now this strategy may not be the best for you. If you're chasing these moves, I mean, this is not the best for you. This is a scalping strategy for nasdaq 100. Okay, so that is your entry. Now remember, I told you that if the market does this, it retraces to these levels. If the market retraces to the previous breach, which is in this case here, now you can do two things. You can enter a trade, but you can as well use the Fibo to measure, to have like a conference. Like a conference of signals when it retraces to the previous breach. Now you take your Fibo, you bring to that and have like 61.8 or the major Fibonacci retracement levels. Okay, so later after the breach here, the market did exactly that. It retraced back to this Fibo level. Okay, it retraced back to this Fibo level. So if you take your Fibo, you place it right there and bring in down like that, you will see that is on a 61.8. so this is super crazy. Actually, you will make, sometimes you will have a winning streak that you not even think is real. Okay, but you will also have some losing trade. So this would be another trade, because you see the zone that you drawn there is the opening of the day. Okay, because we drill that zone on the basis of the opening, the candle that opening, or the next day. Okay, so you can see the market retraced on that Fibo, and majority of the people don't know this. It does that most of the time. I mean, it retraces to that zone there, and it's a Fibo level, and you have a breach right here. So as I said, I will not be teaching you price action, but I have shared a course that teaches price action. I mean, I don't want to waste time going through creating courses for price action where there is plenty of enough price action courses on our website, and I have just shared one course that should teach you everything, or perhaps most of the things you should know about price action. So you don't have to complicate things. It's stupid simple market structure right there. And also, as you can see, this you would have another entry right here, but it did not actually give you a lot of move here right after the breach of this area here, because what the market did after the retest came down, it breached a little bit but didn't go too far. Okay, and then as you can see, the market did exactly what I'm telling you. Yeah. Okay, so as you can see here, the market came back up like that, and then retraced back. Okay, retraced back to the same support and resistance it created area. If I extend this line, if I extend this line, you will see pardon to take this call. I'm sorry for that. I'm receiving plenty of calls here, but let's proceed. So the market retraced back to the previous support here, and the reason here is now there is a course that is called Sniper Basics, or from the ICT, from the Inner Circle Trader. Now they have very good lessons about these sniper entries. So if you don't have that, you should look for the ICT course and go to the sniper entry series. Okay, it teaches a lot of these perfect areas. Okay, so the market retraced on the previous low here, but it was unable to break that low. Okay, that is now another information we have. Normally I would expect this market to do like this. After that, I would expect the market to come like that, and my entry would be here. Okay, my entry would be here for a buy. Okay, my entry would be here for a buy, because in this case, if you look at this structure here, this is if you put Fibo here to here, it will give you a Fibo retracement area there. Okay, this is normally what I would expect, but in this case the market just rolled up aggressively, and so maybe, and you also had a chance to enter right at this breach here. You see, this area here was breached, so this was another area where you would have entered a trade right after that breach there. So the market did not do this. It always do this for a buy scenario, it always do this for a sell scenario. Okay, this is all you have to look for. But for you to see these things, you have to do a lot of practice for you to be able. And I always tell my students to always use this kind of drawings for you to be able to see clearly, because there is a lot of erosion. If at least for my case, when I do it like this, I'm able to read it very well. I'm able to read price action because I've done it very many times. Okay, so as you can see, it's the same thing over and over and over, the same pattern over the same structure over and over. Check for instance this here. Every day you will see this kind of patterns. So for references, let us draw the opening of that day, and we draw that zone there. Okay, so if you look here, the opening. Sorry, I have to take this call, man. Fuck. So sorry about if people keeps calling me. So the market created another N formation. Okay. So here's the thing: when you're trading, the most simple patterns people ignore are the most profitable things that you can never use in trading. So this is exactly this. Okay, so the same pattern again, only this point in time it did not come to retrace to the opening. Okay, the same pattern. And if you look, I told you must read the previous, so the same pattern here. So right after the breach of the first breach here, that it was your entry, you take your profit at 4 candles, you close. Remember, you're entering with big says I told you you must read the previous day price action, and you can see that this is an extension of what is common in forex market, the information from the previous day. So this is the second leg of the M to complete that. However, just use this, but additional knowledge, additional price action of the previous day will help you to have like confidence. So we have our high here established here. This is a high, so and the market was unable to come take out our previous high. Okay, so we are still biased to sell. However, you can see here clearly there is a support and support zone here. The market was affected by that area there. Okay, however, that area was breached here. If I extend that like that, that area was breached here. So this was another area that would have entered the trade, because you expected this to happen. Okay, you expected this to happen, but in this case this happened. This happened. It halted on that barrier there. Okay, it went up a little bit, breaching the previous high here. Okay, a little bit fake out. Okay, of the previous high. Now this was a fake out. Okay, what the market did again, it came down a little bit and then up a little bit. Okay, so this here is a very significant area for you. Okay, now I always say don't enter on the first level. However, if you have a conference on Fibo, you can enter, but wait for this to happen, the second one, that is retesting the previous breach, which is here. Now this here in this case would be your entry here. Okay, right after the breach and the retest of the previous breach, which is that zone, that is your entry now to roll down with this market. Okay, so you may have lost this trade here, but again you have to pay attention. So if the market holds on resistance here on support, so you wait for the market to not breach this area, or you wait for what to happen, because most of the time when you see this W formation, it will go up, and especially if it happens on support in resistance area. So this is the only pattern of the market structure pattern that happens every single day. You can see these are, I've shown you examples with 3 days worth of price action, and you can see that it does this every single day. Most of the time it will do this. Most of the time it will do this. The most important thing is to know where to enter a trade and how to exit, because exit is crucial. Okay, if you reach on exit, you may be on profit, but let alone lose money because you are holding too much. So I only use this while scalping, and it is super simple and very effective. However, you just need like a week of practice to familiarize yourself with this behavior of nasdaq. Okay, so I hope I did my best to try and explain to you guys. I hope if I didn't if you did not understand, maybe you can request for a special team viewer session, which will be of course free. I hope I did my best to explain. However, if you did not understand, kindly let me know, or let us help you via team viewer. We always take our clients very seriously. We don't just want to sell you strategy, we want you to make money. Okay, so I want to thank you again for looking into what we got. Okay, so I wish you all the best. I wish you luck, and may the markets be with you. So goodbye guys, see you in the next webinar, which will be doing some live trade. Okay, so good luck.